All right, so happy to be with Chris. Chris, how are you?
Doing very well, Mike. How are you doing?
Good, good. You have a fascinating company with a really unique value proposition. So I want to give you the chance to talk about that and share some of the work that you're doing with our audience. But maybe just to contextualize, can you give a little bit about your backstory and then how Juno came to be?
Absolutely, more than happy to. So, 7 years ago, I got admitted to a couple of MBA programs and I was super excited, but then I got the bill and realized I was going to have to borrow money to pay for it. And as I started looking into what different student loan rates looked like, one of my incoming classmates asked if I wanted to share some information with him about what rates I was getting quoted from different banks and credit unions. And so we created a Google sheet to see, based on each one of our credit scores, what rates are we getting from different places, just so that we could help guide our classmates towards wherever would have the lowest rates. And then we quickly realized that we were getting really different rates with the same profiles from one place to the next. I expected this to be an efficient market for rates to be really similar for one person to the next, and it wasn't. So we started an idea to say, can we collect a few hundred of our classmates together who all need to get loans for the same fall semester and ask some of these same lenders if they'd be willing to provide a discount to all of the people in our group if we went to that bank or that credit union. And honestly, at this point, we didn't know what we were doing. We were cold messaging the CEOs of a couple of different banks. And surprisingly, a lot of them got back to us and were very interested in the concept. So we started at that point just an experimental version of Juno. There was no business here. It was just seeing if we could help ourselves and our classmates get cheaper student loans. It worked really well, and we decided to turn that into a company once Nikhil and I finally met on campus a few months later.
Such a cool story. How wildly different were the rates when you were initially
Yeah,
testing and just seeing the inefficiencies in the market?
very easy to see a 3 or 4% difference in rate for the
Whoa.
same 10-year term. So and that was what surprised me the most. Some cases, it's very similar from one place to the next, but it's very unpredictable. And for all of we were going to an MBA program. I thought that everybody that was in our group was going to be spending a lot of time researching this as well and digging into what the total cost of interest and fees would be for the different options that were out there. And it was kind of surprising to us at first that most people didn't think that it was possible for the rates to be different from one place to the next. And where I'd spent hundreds of hours preparing portions of their application and not nearly enough time comparing the cost of the different ways to pay for it. And we thought that was a really big hole in the market. There just wasn't enough education and tooling out there to help guide people towards something that ultimately can save them a significant chunk of money.
Yeah, that's awesome. Well, your group negotiation model is just so different than traditional lending, which is, I think, something that's really interesting. Can you walk us through like how you're sort of flipping the power dynamic for your customers and why you see it as a scalable and helpful solution that conventional financial aid models
Yeah.
maybe missing?
Yeah. Let me talk about this slightly separately for grad and for undergrad, and for today versus next year. To put it most simply, right now, if you are going to a graduate program, you have two federal student loan options that you can access. One of them charges you currently a little bit over 8% on a rate and a 1% origination fee. Everybody gets the same rate. It's pretty competitive. And if you need more than $20,500 from that, you have to use the Grad Plus program, which is candidly pretty expensive compared to what else you can find out there. It's a little bit over 9% as the rate and a 4% origination fee. And what we found was it wasn't too hard to help a lot of people get a significantly cheaper private student loan than that Grad Plus product, as long as we could bring a lot of people to the market together. And so what we do throughout the year on the graduate student side is collect demand, which is basically signing up for a wait list from tens of thousands of people across different types of graduate programs and ask them to just basically tell us their estimated credit score, how much they think they might need to borrow, where they're going to school, and their graduation year. We don't share that data with anybody. We don't charge anybody anything to sign up. But the more demand we collect, the easier it is for me and my team to go to different lenders and say, this is the potential size of the pool that we could bring to you. And we want you to share some information with us about the best pricing you could give to each person in each credit bucket. And we're then able to compare what those offers look like across a pretty wide set of competitors, then present the best offers to our member base in June so that they have a lot of time to prepare before they actually need to pay for school. And throughout this, our entire messaging to students is we've done a lot of homework and work in the background to try to get you the lowest possible rates, but don't trust us and take our word for it. We highly encourage everybody to still shop around and try to see if you can find something better. And if you can, please let us know so that we can go work with that new place that maybe we haven't found yet. And that trust building aspect of it does let us build a pretty strong business in the graduate space. The other thing that we do pretty well is a lot of one-on-one conversations with grad students. And so each year we'll talk to thousands of people, some incoming students, some second-year students who are returning, and people who are graduating and looking to refinance their loans, and just help them think through different processes. On the undergraduate side, it's pretty much the same exact thing, where throughout the year we run a content series that we've put a lot of effort into to help people understand everything from filling out FAFSA to understand their student aid index is calculated, to understanding the reasons why they might be able to appeal their financial aid awards. So these three content pieces are meant to help people understand how to pay less money to go to school. And then for those who still need money after they've done all of those things, help them understand what their student loan options are and the cases in which it makes sense to compare their Parent Plus option to a private option.
Very cool. Very cool. What's the business model look like? Like, how are you guys generating the revenue?
Yeah, great question. We only get paid. So our overall business model is to get paid on a percentage of the student loan volume that our partners end up funding. And we're trying to design this as a win-win. We're not going to charge anybody something to sign up or to use Juno, and we're going to tell you not to use Juno if you find a better option anywhere else. And as long as we can keep those two things true, then we'll have a lot of people who ultimately use this and tell other people to use this. And I'd say the thing that maybe points to that being true most is that about 70% of the 200,000 plus people who have joined Juno so far have done so through a recommendation from a friend, a classmate, or another parent.
That's great. I love the win-win aspect and how you're aligning incentives in a very inefficient market so that it's sort of working for all parties involved.
Yeah. I might just double down there on just one point, which is right now the process for finding a student loan is a little bit broken. And I say this because if you go to Google and you try to search for best student loan or cheapest student loan, you are going to get anything but the cheapest student loan. It's an advertising driven platform, and people can spend a lot of money to surface their product to the top. And so you end up in this scenario where it's a seasonal business. So a lot of people are trying to advertise to people in the same 3-month window, and it complicates things. So it does take a lot of work to try to find other ways to get in front of parents and students and explain to them that they just need to shop around. I don't need to convince you to use Juno. I just want to convince you that you should shop around no matter where you're looking. And if I can do that, hopefully you'll search long enough to find us and we'll have a chance to help you find something.
Yeah, that's a great point about Google. Unfortunately, it works that way in a lot of different markets, right?
Yeah.
So, loaded question here, but what do you think of the biggest blind spots are that most colleges and universities have in terms of how they're approaching student financial aid? And then how do you see these changing? Because you alluded before to how things aren't going to look the same next year. So what are your thoughts on that?
Let me caveat with, I think that higher ed institutions and especially financial aid offices have an incredibly difficult job. They have so much that has to happen in such a short window of time for so many people that I don't envy that position. I think they do a fantastic job with the time that they have to do it. I think the blind spot is mostly around helping. On the undergraduate side, not really as much of one. On the graduate side, I think the issue becomes the Higher Education Act has a prohibition on financial aid offices being able to promote or even talk about private lenders outside of a very rigid and structured way. And so most schools well-recognized and compliant system, which is typically called Elm Select, and there's a few others. And what that means is on their financial aid website, there is typically a link to a list of lenders that people have borrowed from in the past to pay for that school. And look, these lists are fine. They do list most sources, but they don't actually let you see what rates you would get. And so you're just left with a list of links that will force you to fill out multiple applications over and over again in order to see if you can shop around and find a better rate. And I just think that their hands are tied under current regulatory policy. That is the only thing that they can show to people. And as a result, a lot of people don't end up shopping around and finding the lowest rate. Some things are changing. That aspect I just spoke about might not be, but starting next year, there is currently a proposal in the House Budget Reconciliation Bill, which would have two very big overall impacts. So on the undergrad side, currently, a lot of institutions get funding, or let's say you're a student and you're going to UCLA, for example. For your first year of school, you can borrow $5,500 through the direct loan program. And if your family still needs money after that $5,500, your parents can use a Parent Plus loan where the borrowing cap is all the way up to the cost of attendance. And so that fills most people's gap funding needs as long as a parent is willing to use that. Starting next year, it is possible that that Parent Plus program would have a lifetime cap of $50,000 per parent, which covers a lot of people, but it also leaves a lot of people with the remaining gap beyond that. The most recent available data showed that about 600,000 parents used more than $14 billion of Parent Plus funding to pay for a single school year. A lot of that is going to get pushed into the private market. And from July 1st of next year and on, it's going to be imperative for financial aid offices to consider what they communicate to parents and to students about what their private alternative options look like to fill that gap. Same thing is true for the grad side now. So I think the latest numbers are about 400,000 people use the Grad Plus program to pay for $13 to $14 billion worth of grad programs in the most recent available year. And the Grad Plus program might end completely. There's another loan program that students will still be able to borrow from. It might have slightly different borrowing limits that are associated with it, but it still means that for both grad and for undergrad, there's going to be a lot of people who now get forced into the private market unless the price of school changes. And there's just going to be a lot more need to help guide people towards what the best cost option is.
Yeah, that's a great point. Very layered and very, very well explained. How can institutions potentially partner to improve net transparency, yields, affordability overall? How do they use you? How do they partner? What's that look like?
Yeah. So far, I'm talking to a couple of schools right now, just one-on-one. Anybody can email me at chris@joinjuno.com, JOINJUNO. And this is what we're trying to help people figure out right now. It's the way to do this that is still compliant with the Higher Education Act restrictions and rules, assuming that those don't change. Our goal would be to find a way to present people with the simplest way to check their rates across multiple places. And look, there's tools out there that let you do that right now. We want to go a step beyond that and let every school use the Juno model, where I'll give you a simple example right now. Under the current rules, a school is allowed to have a preferred lender. They have to run an RFP process that follows specific rules and is compliant. They publish what their criteria are, and the only school that we've seen that does this year after year is Harvard Law School. And they run this process and they get their students fantastic private student loan rates. But what if you were able to combine the collective buying power of Harvard Law School with 100 other schools or 1,000 other schools? That's what Juno's been doing in the background, but going directly to students. And we want to do that for schools directly.
Yeah. I love that. I love that vision. One thing that just sort of strikes me with regards to somebody that's not, admittedly not an expert in financial aid, but just how late in the process is with nuance and pain points. that look very, very different depending on sort of where you sit in the market, right? Like, so the CFO versus the financial aid person versus the student, like, are going to have very, very different views and understandings of like what the process looked like. What are common misunderstandings you see on all sides when it comes to how like the loan markets actually operate? Because like you're saying, there's massive inefficiencies, there's wildly different things that sort of the end person is getting. What are you seeing that you'd like other people to sort of know?
It's a good question. A little bit of a tougher one. I think over the last 15 years or so there haven't been major changes to the federal student loan system in 15 years. And over the last 15 years, the federal student loan options have been there to fill the full bill up to the point of need.
Hmm.
And if that changes, then, which it seems likely to, the importance of getting involved in helping your students find alternatives to help pay for school just
Mm-hmm.
goes up significantly. For a while now, and honestly for the last 15 years, it's been objectively true that federal student loans are the best product for the vast, vast majority of people. It didn't really make sense to do a lot of work to find a private alternative for people. Juno's core audience to date has been the MBA students and law students and other folks who have been, just because of their backgrounds and credit history, and they've been working, able to qualify for much better private rates in a lot of cases than the Grad Plus program. And so our business has made sense. And moving forward, that just completely flips where it's instead of product that helps people save money, it's going to become a product that's needed to help people actually afford to go to school. And it is, I think that the biggest change, if I was thinking of it from the school's perspective, is you now are not certain that the amount of tuition money that you're budgeting to come in every year is able to come in every year unless you're able to find ways for people to qualify for funding in order to pay for your school. And it's going to happen pretty quickly. The general expectation is that some changes might happen to this bill, but that whatever changes might be contemplated, the final version will be in place by the end of September. And that would only likely leave about 8 months between when everything is set and when people start applying for loans to pay for a school, for everybody to figure out what's going on, figure out what to do about it. And so if there's just one general takeaway I could put here, and sorry to be long-winded about this, it's that it's important to prepare early and to get your ducks in a row to figure out what your plan of action would be if these things happen, and to know that you will likely need to be communicating something to people who are applying in Q4 who would be enrolling in fall of 2026. And I would expect a lot of people to be very concerned about what their ability is to pay for every school in just a couple of months.
Yeah, it's well said. Can you break down some of the mechanics of what the negotiating process looks like you on behalf
Yeah.
of the students, and yeah, how you're sort of walking people through that?
Yeah. So we start on the grad side. So we classify ourselves as a member organization, Costco or AAA, and it allows us to provide our members with just think of it as a differentiated rate map than going directly to a lender. So when someone is coming to Juno on the grad student side, I'll just start with what they're seeing, and then we'll talk about how we actually get there. So what they're seeing when they check their rates on Juno is still similar lenders to that they could find directly, but the rates that they're getting through Juno are lower than if they go directly to those same lenders' websites. And so that process it's interesting. It's a little bit weird for people to wrap their heads around sometimes, but you can just kind of think of it as a bulk discounts that are going to the group, AAA discounts going to the group. The way we get there is by constantly communicating with a lot of different lenders in the marketplace, as well as some lenders who haven't been active in student loans for the last 15 years, about what the size of our group looks like, what the credit composition overall looks like, where people are going to school, and why they should consider getting involved with the market. I do a good job if I can convince more people to be involved in the market, which is even more important next year and beyond. So the more competition there is in the market, the more capital there is for students, the lower rates get for students and for parents. And so that is a lot of what we're trying to do. So that negotiation process looks like asking lenders to give us a lot of insight into exactly how they would underwrite our group. What rates are people expected to get, and how can we structure offers that make the vast majority of people better off? And then making sure that we're able to get our partners to add this component that we like to call a fairly comprehensive rate match process, so that if somebody does find a lower rate from somewhere else, we're still able to offer them a true rate match and the best product for them. And on the undergrad side, it's highly similar to.
Yeah. Very, very cool. Are there trends? I mean, you've served like over 200,000 families now, and it seems to me that you're starting to kind of have the growth curve, really really go up as you've got this amazing value proposition. More people are knowing about you. Are there trends that you're seeing in the data that colleges and universities should pay closer attention to that are just helpful to know?
Good question. Nothing particular stands out. I'd say the trends that I think are happening soon that are going to have a really big impact on colleges and universities have to do with this bill again. And maybe I'll just take 30 seconds to explain the three biggest ones that might impact the way that especially financial aid offices view the market. So let's just start on the undergraduate side. The way that the bill is currently written, there's a $50,000 lifetime cap for parent plus borrowing per parent. So next year, you theoretically might not see a very big change in funding sources used to pay for a college. But if a lot of people who, let's say, use the entirety of or the majority of their lifetime parent plus cap, then don't have the ability to borrow in 2027 and beyond, that's going to start having a really big impact then. So I'd say on undergrad, it's just really important to think 2 years out and about making sure you're looking at the numbers for how much are parents actually borrowing right now, and what does that mean for your projected ability to access federal funding in the following year. On the grad side, it's kind of similar, but it has a really big impact, a stark one, for medical schools and dental programs. So the bill as it's written, $150,000 lifetime borrowing cap for graduate loans for professional degrees like medicine and dentistry and pharmacy and other things. And what it kind of means is a lot of medical and dental students might be fine with access to funding for a year, maybe a year and a half. And then quickly after that, there's going to be a limitation on what they can get. And it gets more complicated because what we need to solve, not just the market in general, but I think schools working together and all of the private lenders in the market, is finding a way to create new private student loan programs that meet the specific needs of doctors and of lawyers. The way that works is a lot of doctors, not all, they don't get paid a lot after they graduate. They're going to do a couple of years of residency. And during that residency window, before they start earning their full salaries, they don't have the ability to make full payments on these loans, especially with the amount that they need to borrow. And so we need to find a way for the market to create an extended deferment window, or the ability for doctors to pay a much lower amount while they are in residency. And the same thing is true for lawyers. About 20+% of lawyers at a lot of schools end up doing judicial clerkships. It's great. It's a service to society. It doesn't pay a lot. They cannot afford to pay back a significant portion of their loans during that window. So the market needs to create a product that lets lawyers defer their payments for another 12 months after they graduate. And so my hope is that the more people learn about these issues and the more action gets taken about them, the likelier it is that we're able to solve them before they become an issue. Awareness is the first thing that I think everybody needs to get around.
Incredibly well said. What's the future roadmap look like for Juno in terms of the next 6-12 months? And then how do colleges get in touch? We gave you email address before, but maybe just a quick call to action there too around like what's the best way to start working with you all?
Yeah. Please email me at Chris, as many people as possible understand what changes could look like. I'd love to have the opportunity to have these conversations and learn more of what your pain points are and the different ways that we might be able to solve them. Our roadmap at the moment is focused very much on the three segments of our business. So first, it's making sure that we're able to continue what we do on the undergraduate side, which is to get in front of as many parents as we can every single year and help them understand what the landscape of student lending looks like and why it's incredibly important for them to shop around. So my only mission on undergrad is all year round to have as many parents just learn that they should shop around. And that's more important next year than it's been for the last 15. And so we're working with a lot of different high schools to run our webinar series and to try to partner with them about getting the word out. On the graduate side, we go directly to students. We work with almost every student organization on several hundred campuses. And we're trying to get the word out about why what we do matters and why we need to create large groups of lawyers and large groups of doctors and dentists so that we can convince some lenders to fix the problems that I was just talking about and allow them to defer loans payments until after those key life events. And for refinancing, I haven't touched on this yet, but to date, there hasn't been a reason for people with federal student loans to refinance them for the most part. Many people have been able to, they get a lot of benefits from using the federal student loans. And if they refinance them to the private market, they lose those benefits. And some of those benefits have meant that people have been able to not make significant payments for quite some time now. As these changes I'm talking about go into effect, a lot more people are going to graduate with private student loans. And my favorite thing about the student loan market is when you can refinance a private student loan, because all it really means is some bank gave you a loan while you were in school and they took the risk that you would find a job. Now that you've graduated and you found a job, you're viewed as generally less risky. And there are other banks that are willing to give you a loan at a lower rate for the same term. And so and there's typically no fees involved. So it really is something that people should be doing, and moving forward, many more people will want to and need to do. So to sum it all up, if we can just figure out a way to convince people and to let people know that A, they need to shop around, and B, they need to continue shopping around even after they graduate to keep bringing their rate down, then we can help a lot of people save a lot of money over time and make what is now a pretty difficult paying for college experience just a little bit easier.
Really well said, Chris. And I think that's a great place to end it. Chris, I appreciate you. Thank you.
Thank you, Mike. Really appreciate it.